Ladies and gentlemen, it's time for us to go break down the chart for gold. We want to see what gold holds for us next week, starting from, is it Monday 19th? Yeah, 19th of January 2026 to the Friday coming along with it, which I assume should be 23rd. All right, so let's see. Before we do that, I want to show you something on the screen. Just look at the screen right now. You see, this is my profile on Facebook and on TikTok. So please, I just want to show you something before you begin to wonder if my analysis normally works. Please go and take a look at some of these videos that I have. This one that say if you are a forex trader, that's the first one. This question is for you. Go and find out what is in that video. This one that talked about gold trading bearish entry strategy, sniper entry trading example. Please check that out. And this one that has no cover, that just have my face, please check that out. And this one that say gold trading strategy, see how you can trade gold today and tomorrow. Please go and watch those videos, and then you can confirm how my strategy works, because I don't want you to watch this video and then sleep, and then by the time we are doing review next week now, you will see that everything played out the way I just described them, and you didn't take advantage of it. I'm doing this video just to benefit people. So let's now go into the chart and break down the chart for gold for the coming week. Let's go. So guys, we're here. This is the chart just behind me. So we are going to get into that now. So let's now shut down the camera so that we can be just us and the chart alone. Let's go there. All right, people. This time we're going to look at 15-minute time frame. We're just going to make use of this particular time frame right now, and then I just want to point out some certain things for you. You see this black line here. This is all-time high. That is all-time high, current all-time high, right? That's where it is, and you can see it. So this particular trend line is a bearish trend line. It's also connecting from the all-time high to the recent high that was made on Friday before the market closed, right? All right. So you see this one. This is a yellow line. This yellow line is serving as a resistance. It's a resistance zone, showing us a resistance zone, and it's connecting to the last high that the market made before before the price made before market close last Friday. All right. So, and then we have this. This is signifying the other block. The other block the market created, understand, for moving downward, breaking below this lows and coming downward. And this, you can see the candlestick from here to here. So you can see that we have this resistance, this trend line, and this other block, they are forming a confluence around it here. So meaning that it might just be very, very difficult to break above, which means that we may be expecting market to turn from here. And you pay attention, if you will sell if the market is turning here. If you enter this zone and it's turning, because of these confluences that are here, remember that it may have to clear liquidity around this zone. You see it? So clearing liquidity. So you will not judge that it's going up by the time it's clearing liquidity. So this is a very tight zone. You have to watch out. And how do you pay attention to this place? When the market get to this place, you get it. If market get to this place, and eventually you begin to see candlestick combination pattern that shows sellers are coming in, just like bearish engulfing, shooting stars, and all that. You should get ready. But don't go buying. I mean selling. Don't go selling when you begin to see that. What you like to see here is that because market get to this place, would have created break of structure, you understand, to the upside. So you want to see a change of character to the downside, and then a retest of that of the other block that causes the change of character. This is what I'm trying to explain. You see, market goes here, comes here. Maybe let's assume it clears liquidity and rejects, and then give you a bearish engulfing. You just jump into the market. No, don't do that yet, because what I'm trying to say is this: it has created another block here for breaking above here. You get it? So a change of, a break of structure to the upside, and other block is here. So what you want to see, what you want to do is this: you want to see a return. You want to see, assuming you saw a bearish engulfing like this. Did you see it? Allow for a change of character. Let's assume there is another block. Okay, let's just use this particular other block, for instance. these are formed a change of character because I've broken below this place. Remember that the other block can be created, another new other block can be created here. Watch a break below the other block, but let's use this one that is already here now. So you see the market has broken below. Did you see it? So don't mind this move that is moving down from that point. Allow this market to show that you are still going down. The market will have to come down because it can come up and then break above this place. Do you see it? So instead of that, allow it to return to the other block that caused the change of character. You understand? And give you another bearish engulfing. This is the time to take the trade. So you take the trade from here and probably target here or even below. There is another block below here when you see your probably put your chart where you understand. So you can take your profit here if you meet your risk to reward ratio or the amount of move that you require. You understand? Or you can go below. There's another block. In fact, a gap that this market created, we're expecting it to fill. So this is how you are going to trade it from that point. So that is number one scenario. But you see a scenario where the market did not stop there. The market, assuming, let me delete the, okay, let me leave this. Instead of doing what we talked about now, the market started here quite all right. Instead of that, it break above this place. You see it and get to the all-time high. And if you get to the all-time high and rejects, you need to buy. No, give you bearish engulfing. Do you need to sell? I mean, do you need to sell the market? No, don't sell, don't enter. What you want to do is to allow it to come, as usual, like we said. Let it, the other block that it created, breaking structure upward, for instance, break structure to this point now. So the other block that is created, allow it to return to that place, to return to it. Take out the low and create change of character. You must see change of character first. Let it return back to the other block that called the change of character. Maybe here, maybe anywhere. After it returns to it and give you using confirmation now. For those that are using, of course, pending order where I am talking about using confirmation. That's how I treat for now. I will practice pending order later and then I begin to use it. But for now, I'm using confirmation. All right. So it gives you confirmation in terms of bearish engulfing or shooting star or any other combination pattern that show that sellers are going to the market. What do you do? So you take your trade there. It's now that you are going to sell. Do you get? It's now you sell. This thing don't. I need to pick another one. So it's now time for you to take your trade. Set your stop loss above the high or above this high. You get it, and then sell. Understand? Take your profit around here, or you can go below that, depending if you meet your trading setup and all that. Did you get it? So that is the sell scenarios we'll be considering. So the third sell scenario you need to consider is this situation. See that the market gets to this place. You see the place that it turned on Friday. It get to this place and it did what? It broke below it. It broke below it. Allow the market to go. If I can, this thing is not connecting to anything. Okay. So allow the market to break below, and then it's going to create a change, a break of structure to the downside. All right, allow it to return to that point, to the other block that causes the change, the break of structure to the downside. And then along this path now, after it returns to it, to the other block, allow it to give you a combination pattern, candlestick pattern that show that sellers are coming in, like bearish engulfing, shooting star. All right. Then you take the trade. Let's say this is the place. You take the trade here, setting your stop loss above the high, and then target the area where we have from this area. You should target the place where we have gap. If your chart have gap like mine, not able to play now because of this. Okay, let me see if I can show that. Let me see if I can show that. All right, okay, this is the gap. This is the gap. This is the final place we expect this market to get to before it start turning and going upward. Did you see it? And all that. So this is just the trading pattern you are going to use. So allow the break below this point. If you did not sell from here, remember you can sell from here or any of this zone. The market is still going up to meet this place. But assuming that you sell up to this point and the market is still going down, allow it to break below here, retest it, you understand, in terms of other block and all that, other conferences you can find, and then do the sell trade. All right, what about the bar scenario? Let's talk about bar scenario so that we can close about this. So, but now we're going to take buy scenario based on where the market is currently right now. Okay, this place where the market is. Let's clear this. All right, based on where the market is now. Remember, for a sell scenario to happen, you need to allow from where the market is now. You want to take a sell scenario, then allow this market to come to break below here. So let me say this last time before talking about a buy scenario. Allow this market to come and break below like this. Retest the other block that caused the change of character, because this one now is not change of character. Retest it, you understand, and give you a trigger that I'm coming down. Then you take it down. Did you see that? That's what you do here. But what about for a buy trade right from here now? Let's follow the direction of the market to talk about the buy trade, the buy scenario. Following the direction of the market to talk about a buy scenario. So the market is going up. Are you seeing it? The market is still going up. Now, if you're not in the market, don't go buying anything. Just hold on and be patient. This is what you need to do. Allow the market, because here is creating a new order block. If the market breaks above this particular highs, it would have given you a break of structure to the upside. Why this is the order block that caused it. So allow the market to return the order block that caused it. Give you a buy setup in terms of this. Did you see what I did now? This is bullish engulfing or hammer. You get it? So you enter the trade at this point. Take the trade at this point. Set your SA below here or below this low. You understand? And target the all-time high. Target the all-time high. Or target this, okay, target this confluence. This is a very strong confluence. You target it. You understand? For you to target the all-time high, allow it to break above this place, then creating a new order block, retesting it, that causes it to break, or even the other block is here. You understand? So just allow it to return to the other block that causes the break of structure to the upside. And then what do? You give you an entry trigger for a buy, bullish engulfing. You understand? Shooting hammer. Then take the trade here, place your SA below and target the all-time high. You understand? That is the scenarios you should be looking at in terms of buying or selling this market. Another scenario is the situation. The last scenario I want to talk about. If there's other scenario you want to ask about, you can drop your comment in the comment section. I will come and attend to it. If there's anything you observe, you want to ask a question, since I cannot do this live, I don't have enough followers to be doing this live on TikTok. All right, you can come to YouTube when I'm still going to go live on YouTube to talk about all this all again. All right, so I've forgotten my line of thought. Okay, I'm talking about the last buy scenario. Now, this is a situation where the market eventually, I don't know, maybe from this point or from this point, anywhere, it comes back to this place. When it comes back to this place and rejects or do anything, do a higher high. You understand? Don't wait for any other block. I'm telling you that. Don't wait for any other block. If it happens like this, all you need to do is that if it gives you bullish engulfing, hammer, or whatever it gives you here, take the trade and take your profit here or here. You get it. That's the last one. I don't know if there is any scenario that I forgot, I did not remember, but I'm going to stop this video here now because it's getting too long. And then ask your question in the comment section. I can come back and treat it again before the market opens. There's no problem about that. So in absence of that, I will see you in another video. But remember, these scenarios might play out. Remember that the two key things you need to remember is that before you do a buy trade, if the market is already selling, allow for a change of character around a change of character to the upside and retest of the other block that caused that change of character to the upside before you take a buy. Now, if the market is already buying and you want to sell, please allow for the change of character to the downside and a retest of the other block that caused the change of character to the downside. Do you get it? And then When it resets it and give you an entry trigger, all of them must always, for me, I use confidence. That's why I talk about entry trigger, like bearish engulfing or bullish engulfing. It gives you that. You understand? So in terms of a sell, it will give you bearish engulfing after retesting the other block that causes the change of character, or the other block that causes the break of structure. You understand? And then you take your trade there. I hope I'm clear. If there is any confusion, please ask question in the comment section. I'll come back and answer you based on whatever I said here, or whatever I did not say, I did not capture in this chat. So see you in another video when I come doing analysis during the week. Remember, this analysis is for the next week. That's the week starting January 19 to the Friday, I think January 23. That's this analysis. In fact, you can even span up to the following week, depending on what happens between the market open and the close for the week. So see you in another video. Bye for now.